Welcome back. You're watching Markets at Noon right here on ET Now, with the markets actually 0.5% downtake. You have the broader markets that are underperforming the benchmark indices, and Nifty Bank, that one is actually the only pocket that is in the positive territory, at least when you talk about the larger scheme of things when you talk about the markets. But let's talk about life insurance sector, because you have the February data that's come out for the insurance space, and it's not that enthusing. It's not looking that good, especially when you talk about LIC, because it's the fifth consecutive month of contraction coming in for LIC. So let's put the spotlight on the entire space to understand what should one expect when they are actually trying to invest or gauge the entire insurance space, especially the life insurance space. We have Raghvesh, who is the insurance and capital market analyst at JM Financial Institutional Securities, joining us. Thank you so much, Raghvesh, for joining us on the show. Good afternoon to you. Not a great afternoon coming from most of these companies which have posted their insurance data for the month gone by, especially LIC being the major of the lot, but fifth consecutive month of decline. What do you think would have actually contributed to such a performance?
Thanks for having me. So, a key trend that we see is there is often a demand shift which happens. Like January was pretty strong for the sector. The sector had grown at around 20% on a YOY basis, 2-year CAGR of 16%. Now, a lot of the people who would have planned to buy a policy in, say, 4Q25 would have already purchased in January, maybe looking to purchase in March as well. So we don't look at monthly data with that much of circumspect view. Maybe March, which is typically the largest month in the year, it again surprises positively. That being said, 1.5% growth for the private sector is pretty weak. Coming to LIC, the contraction in YOY growth has come up with the new surrender norms, which came in. An established insurer, 1.5 million agents. It is taking its time, but we remain positive that going forward, it will be able to return to a growth trajectory. Yeah.
All right. Hi, Raghvesh. Good afternoon. This is Shrishti also joining in. But one specific data that we watched out for was the ULIP number. This particular time, what we have seen is that has seen to be taking a backseat. Well, of course, the markets did not perform better. But given the volatility in the markets, do you believe that this is expected to underperform the rest of the segments in the near term? And what is the medium-term outlook?
So ULIP for a life insurance company is the lowest margin product among the savings and protection side. So much of the last year, FY25 was spent looking at how a higher ULIP mix has actually led to lower VNB margins for these players. So a shift away from ULIPs towards some of the more margin accretive products would be positive. At the same time, in the mutual funds, we have seen that over time, investors have bought the dip. ULIP is similar to a SIP product where we invest on a monthly basis or an annual basis. So difficult to jittery markets or flattish markets will result in a lower ULIP sales. What we are hearing from the channels is that there has been some dip in ULIPs, positive in terms of the margins, maybe negative in terms of the growth outlook.
Right. Raghvesh, one of the main criteria also is the fact is that usually what everyone expects is the month of March to be a strong month, especially when you talk about these life insurance counters or life insurance space as a whole. Also, one of the reasons, the primary reasons also could be the fact that a lot of them go ahead with their financial planning also, because you have the entire ATC deductions also, where you have the life insurance, that premium also, that kind of also is a part of it. But now with the new tax regime coming in and the fact that the government emphasis on the new tax regime and these exemptions also going in, do you think that this will hamper that usually strong sort of a month sort of scenario for the insurance space, especially the life insurance space?
So we have actually looked at the data for a long period of time. If we compare it to say FY 15-16, around 38% of the full year premiums used to come in the March quarter, 4Q. That share has gradually reduced to somewhere around 30 to 34%. Of course, tax planning is a criteria. Even other than that, if we look at it, a lot of the agents and the other channels become active in 4Q after a weak 3Q where the focus is a lot on festivities, going out in December and all that. So in general, the trend of looking for an insurance product only for tax planning has reduced. The new tax regime, of course, is beneficial, but the companies have come out and given numbers of very low single-digit percentage of people actually coming in and claiming deductions under ATC for life insurance policies. So I don't believe that March can be substantially weaker as compared to the previous years. And of course, the new tax regime has become incrementally attractive. It's not that it has come in totally out of the blue. So on a very strong base of the last 2 years, year before last, March 23, there was an impact of expected taxation in the higher ticket policies from April. So the base has been set very high. Even last year, there was a month-on-month growth of around 80% in the month of March.
Yeah.
On that base, I don't expect us a 20% growth, which is somewhere where the industry has trended over the last 11 months. But
All right.
we are
But
positive on growth
Raghvesh,
even
another
in March.
point that we wanted to understand that yes, of course, we have got a sense that where is the industry headed. But before we let you go, if you can share us that amidst the players, which amongst them is better or the best placed right now, and which could be the likely winner in comparison to its peers? What are your top picks?
So our top pick in the life insurance space has been HDFC Life Insurance. We like the company because it has a very diversified product mix. When the markets were strong and there was a natural demand for ULIPs, it catered to them, got a lot of new customers in metros and also with a focus on tier 2 and tier 3 towns. If a focus shifts from ULIPs to some of the other products, the company has got a very strong product suite within par, within non-par. The Sanchip products are pretty well advertised, well taken up by the market. So we don't see any major concern on growth, even if one or the other product fails to find favor with the market. Valuations are pretty inexpensive at 1.7 times on FY27 embedded value, perhaps led by some discomfort on the impact of surrender norms, any possible impact of a cap on banker. But with a 15% growth, improving VNB margins, and EV growth, which has always outperformed the VNB growth in the last 5-6 years, we like the stock at 1.7x by 27 for a consistent 16 to 17% EV growth.
All right, point taken. Thank you so much, Raghvesh, for joining us on the show to talk about the insurance space as a whole, as well as talking about the counters which are looking attractive to you at this point in time. That was on the entire life insurance space, the fact that the premiums have dropped, and hopefully March should look much better than the month of February. LIC, fifth consecutive month of contraction, the stock is down about 2.3%. But
if you like this video, then like, share and subscribe to ET Now.